Morning traders, Paul here with GammaEdge. Today is Wednesday, the 23rd of November, day before Thanksgiving. Let's get started. Here's the fine print, read to the bottom. If you agree, hit that play button. Summary for today. Yesterday we had a reversal off the open. That has created an opportunity on the short-term scale. The intermediate term, we have a new long also, and this is typically characterized when the bolded cumulative tick is above what we call the historical ribbon. You'll see that on the next slide. Long term takes a little bit longer. It's been choppy, horizontal, and the reversal to long is underway, but it'll take several days to get there. Other models are in various states. The Russell 2000 still very, very bearish, not participating. Small caps are not in favor. The NAS is improving, and the S&P is lagging, but will potentially continue to improve here. No real changes to the goalposts. Plus GEX exposure, which is the call-dominated exposure, is at 4,100. Minus GEX remains at 36. No real changes there. We'll note that the SPX PM settled put open interest level, which is not a gamma or delta construct. It's just an answer to the question, where is the concentration of puts within the PM complex? It has moved up, and this could be one of two things. Either we see puts going in, bringing the price or bringing the count up to 3,100, calls being closed, combination of both, whatever the case may be. The key here is that when we see the bottom of the complex coming up, we like to see a corresponding increase in the upper part of the complex, and we're not seeing that. So this could be a little more short-term positioning for downside move. We'll just have to wait and see how that plays out. Yesterday's rally was fueled by a significant amount of short-term calls being added and puts being closed. That propelled us north, and we went on voice a couple times in the Discord through the day, and we talked about what we were seeing in terms of dealer adjustments and price action. Pushed us faster and higher than we thought, but nevertheless we pushed upward and still within the ranges that we had talked about yesterday. We think we're really heavily imbalanced on the ZeroDTE and the TwoDTE, which is Friday. No trading tomorrow, so there is no 1DTE. We are watching for a push northward up the SPX chains, north where we closed at 4,004, as people continue to add calls, and then watch for reversals as people surpass the level where we think there's a propensity to monetize, and the monetization charts will help you with that. Transition zones have moved up slightly. This is important because that becomes the launching pad for continue pushing north. When we get too far above that, and you can see we are far above the transition zones right now, the rubber band is getting stretched and we can pull back. So we would not be at all surprised if we had a pullback as indicated there. 40.50 appears to be the short-term upside target. Note, liquidity is not all that great above 40.50. So it actually does open the door to a 4,100 and even points north there, but right now 40.50 does appear to be today or Friday's target. Downside support, we're still looking at 38.90. Below this level, we think the bears will be emboldened, and we'll have plenty of warning to get down there because we are in a very call-dominated environment right now. As I said, the market model, we had that reversal right off the open. We've got what we call railroad track up on the short-term moving averages of the bolded cumulative tick. We had the crossing of the ribbon, and now we're above this day one count, very strong. We are looking for a continuation north. This is at 4,004, but we are also mindful, of the extension level above this, and we could actually pull back. So it'll be interesting to see, especially with the news cycle today, and see how that all plays out. But look for a continuation north or a pullback. The overall key levels, no real changes. 4,100. 3,600 in the SPX combo complex. I did highlight here the POI coming up from 3,000 up to 3,100. Note that the expected move is still under 2%, so we are expecting fairly low volatility. The PM settled complex drawn where the propensity to monetize or reverse is within the SPX complex. Note we are starting to see the JPMs already start to rear their heads. December and January are out here already. Very call dominated delta structure here. This is a transition that we're looking at, so it would not be surprised at all of a pullback to this particular area, to the top of this zone. Not thinking we're going to go much below that, at least not in a short-term context. ZeroDTE, as I said, I've overlaid again the reversal points or the balance points. Note here we've shifted up in the ZeroDTE. Very, very heavily dominated up here. 40, 50, 55, and 60, so just be aware of that and aware of what that potentially could mean in terms of a monetization. So if we push north here today, we think that 40-25 area is going to be kind of that first reversal zone where we're going to see a propensity to monetize. It's where we start transitioning from out of the money calls to in the money calls for the overall SPX PM complex. And then as we push north up into the 40-50 zone, the contributions here, and people may take the money and run, especially if there's any sense of dropping out and watching those deltas flip back over and limit to zero. Taking a look at the 2DTE, this is Fridays, you can see, again, very strong delta structure, 40-50 levels right here. Transitions opening up a little bit, and then to the downside, that 38.90 zone is there. Not overly strong in deltas, so we could actually see if any puts get opened up down here, we could actually see this erode like sand underneath our toes on the beach. So just be aware of that. But nevertheless, would not be surprised at some hiding areas. The 39.75, 80, 85 area could be a good parking spot into the Thanksgiving break. Really, anywhere you see these major levels could be potential hiding areas. Not expecting much up in this area, although we've done it before. We've done the 90, 95, 4,000 area, and you can see that it's almost a zero in that particular area too. Taking a look at the combo here, the 4,000 strike, not very liquid. This is a COI, POI. They've been here for a long time. We bounced around a little bit, but they're essentially not liquid. Want to draw your eye up here. We are watching the structure above the 4100 level start to really dominate and grow in terms of both gamma as well as delta. It's turning more call positive, and as we see that, that's material. Note the negative gamma and deltas that exist up here. Those are the January 30th from JPM, and then down here are the Decembers. Just be aware of that transition area. Again, hiding spots. This is the overall combo complex. It's important, and the transition really didn't move much from yesterday. I do want to call your eye down here to the lower right. When you take a look at the gamma that's coming off between now and December, over 50% of the SPX combo is set to be rotate out and go somewhere. That money is over $3 trillion notional. That money's going to go somewhere, and we have to pay attention to where it's going, and we'll see it here in the deltas, and that'll help us gauge where we are in the overall structure. Projected upward today in the SPY and the other ones that are not shown here. Fairly strong move yesterday, of course, right up here to 399.95 when I ran the data. The key takeaway here is that we're going to continue to push. We're elevated high. You can see about 10 points up here and 20 points down. So we are approaching a higher level where monetization is possible. This is particular pointing to that 40, 80 level on the SPX and ES and things of that nature. So be aware of that. To the downside, I think support is going to come in right around that 39.70 area. So I want to pay attention to that too. Finally, last slide here, goalposts minus GEX at 3,600, plus GEX up at 4,100. You can see we're right here above the 4,000 strike, fairly deep into a call-dominated structure. Typically when we get up there, we always come back into the transition, so it would not be at all surprised of a pullback once we get above those balance points, those moneyness balance points. So look for the 39.60 area to be in play, and then once we get below that 39.50, you can see that we start forming into the negative side of the overall structure. So that's it for today. Urge everyone to come and join us in the Discord. You can get there by going to GammaEdge.us, filling out the pricing tab, and come on in. Great group of traders, 14-day free trial, actually running a special right now. So would want everyone to come in and learn what we're doing and how to apply it to your trading. Follow us on Twitter, please, at GammaEdges with an S, and then here on YouTube. Follow us, of course, and if you like today's content, give me immediate feedback by hitting that like button, and that'll tell me that the content I'm providing to you is valuable. So with that, good luck everyone today. Have a great Turkey Day tomorrow, and we will see you on Friday. Take care.